Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Crosby, General Manager at Tradingview, for a review on some key earnings that we have coming up this week. And Pierce, it's interesting. We hear so much about the election and what's happening with COVID-19, and of course, how well the consumer performed over Black Friday and Cyber Monday. But we do have a number of key earnings coming out in sectors that have really been leading the market this year. Before we get into some of those, let's take a look at your first chart where we're reviewing multiple major averages and their performance.
Sure, 100%, and thanks for having me again, Jill. Broadly speaking, wanted to take a quick look at just the overall sector performance. I mean, one thing that I think investors should be thinking about coming after the election is that the performance of really the small cap and mid cap businesses. Broadly speaking, if you look at the Nasdaq over the course of the year in this chart, you can see obviously an outperformance in tech, but the resurgence of the mid caps and small caps is something that I think is a generational shift and something that, for the next 4 years, we could actually see a very strong comeback and potentially actually outperforming the SPX. As you can see year to date, I mean, we do have basically a comparable performance. And, with additional stimulus measures targeted at small business and mid-sized businesses, that index could move even higher. Definitely something to keep on tap. And yeah, I mean, obviously, the larger story is that Nasdaq 100 as well as the Nasdaq Composite is massively outperforming this year. And so thinking about a retracement from the highs, we could look at a rotation into kind of the mid cap and small caps versus the others. Yeah.
And Pierce, let's talk about some of those Nasdaq 100 names, because of course, enterprise software, we'll see a number of them report this week, Zoom being one of them, which Zoom has essentially become a new part of our vocabulary. It's how we're communicating now and do all of our content. So what are your thoughts around enterprise software and what they need to deliver this quarter?
Yeah, I mean, people are really looking for that continued growth in revenue numbers. So people are looking across the board for growth rates. And most of these companies today are valued based on future performance. So obviously, Zoom, Elastic, Cloudflare, really, hardcore enterprise software have, doubled, if not tripled this year. And we're looking for a continued move upwards in that. If we do see some flatlining, investors may want to take some kind of risk off the table, because really what that is a rotation, or basically a saturation of the market, and basically people looking to invest in other sectors or assets that may have a larger outperformance. There's obviously kind of an ebb and flow of cash in and out of assets. And so, a combination of a slowdown in growth plus a combination of other sectors potentially having more catalysts in the near term might be a bit of an issue for some of these kind of enterprise darlings for the past year. We really have seen incredible performance across the board, both on revenues and earnings. But Zoom, case in point, their revenue has grown substantially over the last year. They've basically skyrocketed from an unknown company to, a multi-thousand person company, operating at a very large market cap today. And so I think that, investors are very interested to see, is this going to continue, or have we kind of hit that market saturation? And so this earnings, which comes up on December 4th, is going to be very telltale as to, the potential future market for Zoom, or whether or not they've actually captured the market. And we really kind of can, sit back and look at the other tech names that might be underperforming, or potentially have larger reach, a lot of the consumer tech names versus the enterprise tech names.
All right, now if we go along to the second sector that you'll be watching this week as well, retail.
Yeah, well, I mean, so retail, it's very interesting. So a lot of earnings coming out this week. Obviously, if we compare versus, the larger tech names, very different story. If you look at these charts, browsing through, I'll probably touch on a couple that I think are most compelling, but certainly, the likes of restaurant retail. So I bring up Cracker Barrel specifically here, which is, a name that people know as kind of a household restaurant darling. And broadly speaking, over the course of the year, they've been absolutely beaten up. And so to really, this earnings call is going to be really kind of an indication of how they're thinking about, survival through kind of a very turbulent period for the next couple of quarters. Whereas other names like Restoration Hardware, we've seen, obviously the reports from Walmart and Lowe's last week are telltale of an increase in cost. And so if we do see Restoration Hardware keeping that cost lower for sales, then that could be actually really interesting versus the performance of obviously, Walmart obviously performs quite well for their grocery business and other delivery businesses. And so, Restoration Hardware doesn't really have a strong delivery business yet. So we're going to want to see a lot of at least talk about how they could potentially pivot their model to focus on, maybe some of the delivery or service type businesses versus, their core retail footprint, which is obviously hurting a lot. But, it's really interesting because some of these retail brands, I bring up Dollar General and have a chart here we can go through. Dollar General has performed massively during the whole pandemic, and not something that I think people really realize that, it is these kind of discount or, bargain type retailers that actually have outperformed the average, right? Especially as we've seen, kind of high level retail, luxury take a big hit. Looking at these kind of discount names like Dollar General is definitely something that I think people should keep in mind. Dollar General is certainly an extremely strong performer, and they continue to outperform on not just revenue growth, but their earnings numbers as well. So certainly one that I think investors should be staying tuned for the quarter. But they do have a very large debt load. So I'm thinking about kind of that pivot from kind of debt laden to actually revenue driven, looking to pare down those costs as they grow. Could be definitely something to watch.
But they're also in the sweet spot that we've seen with retail throughout pre-COVID-19 as well, where there's a tale of the have and the have-nots. You have your discounters. You can even throw TJ Maxx and Ross stores in there that have performed exceptionally well. The retailers with a strong e-commerce presence, Walmart and Target again, and then the department stores or standalones are continuing to struggle, and COVID-19 only exacerbates that. So I'll be curious to see what all of these companies have to say in terms of guidance. I would imagine now that we know a vaccine's on the horizon, it's a matter of timing in mass scale and disseminating through the population. We know that the Biden transition is happening now. If there's a little bit more clarity for corporate teams to be able to provide some of that guidance, because we virtually had, we didn't really have much this last quarter.
Sure. Yeah. And I think that, overall, across the board this week, listening in on executive levels to really understand what they think the Biden kind of campaign means for their actual performance, but also their kind of market confidence, right? We really do want to see whether or not people are kind of moving in and, kind of getting aggressive, or are they really still thinking about kind of the worst case scenarios? And that is definitely a telltale sign is, how serious business leaders are taking this. And now that we have, the full kind of transition team kind of coming into place, it's a clear indication, not just with potential, Janet Yellen appointment, but with some of the senior economic staff, that this is more of the same, if you will. And so not rocking the boat and providing more economic stimulus is going to be a very strong driver of market confidence overall. And so if that does, kind of play with the kind of executives at some of these companies, I do think that we can see, kind of that confidence actually, kick into drive here in the first quarter after this fourth quarter report.
All right, Pierce, great to catch up with you as always. Thanks for joining us on Trade Talks.
Yeah, thanks, Jill. Talk to you soon.
You got it. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.